Yeah, good morning, everyone. So, US market saw marginal decline. Uh, in fact, in last few days, the US market remained sideways, mainly on account of the run-up which we had seen earlier. But today, what we feel that the event which is there today can give direction to the market. Today, CPI inflation is expected, and if suppose that indicate that the inflation is taking some breather or cooling off, then quite possible market may take it positively and market can come out of the range. US market, the CPI inflation is expected at a 0.2% increase month on month. I think that will be the key thing to watch rather than year on year. Inflation is expected to increase by around 0.2% month on month, whereas last month it has increased by 1.3%. So this need to be watched in the evening. But apart from that, Asian market are indicating some negative trend with most of the market are down by 0.5 to more than that. Even Hong Kong is down by over 2%. That is mainly led by tech stock decline in Hong Kong. And even commodity also is seeing more of a sideway to positive movement, wherein oil is up by around $1, and aluminum and copper are marginally up, and iron ore and steel are marginally 0.5% down. So more of a sideway indication. So Indian market, what we feel that will again see wait for the US event and may remain sideways in today's trade. Now I'll request technical team to take up first.
Thank you. Good morning, all of you. This is Swati. Today, the Nifty is likely to open on a flattish note, and we are likely to witness a sideways momentum during the day. As of now, Nifty is well placed above all the moving averages, which gives some sort of a relief sign. Going ahead, the Nifty has a resistance at around 17,600 levels. If it's break that level, then 17,670, 17,720 levels can be seen in the coming trading session. Whereas on the downside, 17,740 will be the 17,470 will be the first support level. Any move below that level, we are likely to witness some sort of a profit booking, which might take a Nifty towards 17,380, 17,320 levels. Coming towards the bank Nifty for today intraday purpose, 38,650 is the first resistance level. Above that level, we expect to test 39,000 levels on the higher side. Whereas on the downside, 38,200 will be the first support level. Below that level, 38,000 and 37,700 levels can be seen. Coming towards the Nifty Finance, for today intraday purpose, 17,500 and 17,620 is the first resistance zone. Whereas on the downside, 17,330, 17,240 are the crucial support levels. We need to keep eye on it. The overall view will remain a positive on the Nifty as long as it sustains above 17,400 levels on the closing basis. So those who are having any long positions, hold with the strict stop losses. I think that's it from my end. I request Neerav to take a call forward.
Yeah, thank you, Swati. See, on the derivative front, the PCR has moved up from 1 to 1.3. Open interest has increased as well from about 20% in the last couple of trading sessions. The VIX has increased as well. It has come to around 19 levels. The overall open interest for call side, highest open interest has shifted upwards from 17,500 to 18,000 strike. So the PCR at 17,500 also moves above 1, so that is a good sign. 17,000 put has the highest open interest still. That should move upwards, which is very important. All in all, sideways trend is expected for the next couple of days. 17,400 and 17,800 being support and resistances. From the stock specific front, banking did well. We are expecting metals to do well in the next couple of trading sessions. They've seen good open interest built up. Look out for the same. That's it from my side. I'd like to have the fundamental team to take over, please.
Good morning. The life insurance industry numbers for the month of July have come, and growth for the industry has slowed down. The individual APE growth decelerated to 5.5% year on year. For all private listed companies, if we see, the individual APE has actually declined between 3 to 10% on year basis. Given the high growth rates that we saw last year for months of August and September, the number for current year for these coming 2 months should also be soft. So from that perspective, Q2 numbers are likely to be subdued. And also we think that this slowdown is because of the inflationary environment, which is impacting consumer sentiment, and also because of market volatility, which is impacting the ULIP growth rate. So expect softness in the life insurance industry. On the results front, Mayur Uniquota's result has improved. Revenue grew 26% sequentially, which was above our expectation. And despite slight margin contraction, the profits grew on a sequential basis by 8%. And we feel that with auto and footwear industries expected to witness good growth going forward, we are positive on Mayur Uniquoters. City Union Bank result was in line with expectation. Slippage was more or less in line at 2.6% versus 2.2% in March. This is a seasonality aspect, which is fine. Net NPA remains stable at 2.9%. ROA is back to 1.5% where it used to be pre-COVID. However, loan growth remains sluggish at just 12% year on year. Management has increased their loan growth guidance from earlier 12 to 15% to 15 to 18% now. So once the loan growth picks up, we think stock has decent scope for performing well. Anup Engineering, although result upfront looks bad, but if we look at the revenue, it was flat year on year, margins and profit declined, but the order book has improved substantially to 537 crores versus 400 crores in March quarter and 300 crores last year. If we see quarter one also seasonally is the smallest quarter, so one should not read too much into it. And from long-term perspective, the growth opportunity remains decent. So we remain positive from long-term perspective. Indian Hotel result was above expectation. Occupancy improved from 58% in March quarter to 70% in June quarter, while ARR increased by almost 8% to 11,400 rupees, which led to RevPAR, which is revenue per available room, increasing by 30% sequentially to 8,000 rupees per room. The improvement in RevPAR was mainly because of good demand on the leisure travel from domestic tourists, a strong recovery in corporate meetings, conferences and events, and thirdly also sporting events like IPL, which mainly happened in Mumbai and Pune, which benefited the company. These metrics now are above the pre-COVID levels and pose well for the company as well as the entire hotel sector. And we think that there could be good 3-4 years of upcycle in the sector. Also, management reiterated the company's plans to execute its FY26 goals, where they are focusing on 4 targets. One, reaching total 300 plus hotels. Second, achieving consolidated EBITDA margin of 33% by FY26. Third, achieving 50-50 mix between owned hotels and management contracts. And 4, retaining a net cash position while pursuing its growth plans. So we are positive on Indian Hotels. Amber Enterprises, the AC outsourcing company, result was below expectation. Revenue was in line, but EBITDA margin came at 5.4% versus expectation of 6.6%. Profit came at just 42 crore versus expectation of 53 crore. And now we are entering the lean season for ACs. So monsoon and then winter. Not much action will be seen in this space, and stock will remain lackluster going forward. So we are neutral here. Everest Kanto cylinder result has declined. The revenue came at 380 crores against last 2 quarter run rate of 470 crores. So this is a substantial decline and way below expectation. EBITDA margin also came low at 16% versus sequential quarter at 20%. Profit came at just 39 crores versus 70 crore in March quarter and 52 crores last year June quarter. So expect the stock to come under pressure, and we change our view from positive earlier to negative based on this result. And one can exit the stock. Thank you.
Eclux has posted below expectation numbers for the quarter, majorly on the margin front. Dollar revenue came in at $80, around 80 million versus QQ of 77 million. However, EBITDA margins declined and came in at 23.2% versus expectation of 28.8%. Stock is trading at a PE of 14.9 times FY24 EPS. Delivery has posted its result, and the company has posted declined set of numbers for the quarter. Revenue grew by 15.7% QQ. However, major hit was on the margin front. EBITDA margin came in at negative 14.6% versus year on year of negative 3%. Satluj Textiles has posted improved set of numbers. Although the revenue has declined by 4% QOQ, however, EBITDA margins have improved and came in at 15.3% versus QOQ of 13.7%. Stock is trading at 5.1 times EPS. Similar to Indocount and Welspun India, Trident has posted declined set of numbers for the quarter. Revenue grew by 10% Q on Q. EBITDA margins also came down to 15.5% versus QOQ of 17.5%. Stock is trading at 18.1 times FY24 EPS. Other than this, Subex has posted declining set of numbers for the quarter, although the revenue improved by 5.7% QOQ. However, EBITDA margin came in at 0.9% versus QOQ of 1.3%. Thank you.
Good morning. Nuvoco's result was above expectation. Sales volume came at 4.7 million ton versus expectation of 4.8. Realization per ton came at 5,644 versus expectation of 5,596. EBITDA per ton came at 768 versus expectation of 731. The stock is trading at EV by EBITDA of 8.6 times FY24 earnings. National Aluminium result was below expectation, both on revenue and EBITDA front. Margins have declined from 37% to 23% sequentially. Ratnamani result was below expectation. Revenue came at 977 crores versus expectation of 648 crores. EBITDA came at 131 crores versus expectation of 141 crores. Sanghi Industries reported a declining set of numbers. Revenue came at 339 crores versus 355 crores sequentially. EBITDA came at 19 crores versus 44 crores sequentially. Margins have declined from 12% in the previous quarter to 5.6%. Stock is trading at EV by EBITDA of 7.2 times FY24 earnings. Apart from this, JSW Steel reported its volume numbers for July month, wherein crude steel production declined by 35% quarter on quarter. However, it improved by 14% year on year to 1.57 million ton. This is neutral for the company. Thank you.
Good morning. MRF announced its result. The result was marginally below expectation. Revenue came in at 5,600 crore versus an expectation of 5,373 crore, which grew by 7.7% sequentially and 36% on a YOY basis. EBITDA margin came in at 8.5% versus an expectation of 9.7%, which was lower sequentially as well as on a YOY basis, mainly due to the impact of the sharp increase in raw material costs. The company board has approved raising of rupees 100 crores through issuance of non-convertible debentures on a private placement basis. The stock is trading at a PE of 25.3 times FY24 EPS. JK Tyres announced its results. The result has improved. Revenue came in at 3,643 crores, which grew by 10% sequentially and 40% on a YOY basis. EBITDA margin came in at 7.8% versus 6.9% sequentially and 10.7% on a YOY basis. The 90% basis point gain in EBITDA over the previous quarter is powered by operating leverage, efficiency improvement, and product premiumization. There has been a healthy pickup in demand both for the passenger as well as the commercial tires, both in the replacement and original equipment markets. Raw material and other input costs witnessed an ongoing uptrend, thus impacting margins. The company has undertaken multiple price revisions, though not to the full extent, and will pursue further opportunities. The stock is trading at a P of 7.7 times FY24 EPS. Uh, Formerly known as Motherson Sumi Systems, the name changed to Samvardhana Motherson International. The result is above expectation. Revenue came in at 17,615 crores versus an expectation of 16,287 crores, which grew by 3% sequentially and 9% on a YOY basis. EBITDA margin came in at 6.1% versus an expectation of 5.4%. The market demand remains strong, however, due to various supply chain constraints, including chip shortages. Production volume of OEMs continue to fluctuate. The passenger car sales have shown improving trend from April to June. The stock is trading at a P of 17.1 times FY24 EPS. Minda Industries announced its results. The result is marginally below expectation. Revenue came at 2,555 crore versus an expectation of 2,476 crores, which grew by 6% sequentially and 59% on a YOY basis. EBITDA margin came in at 10.4% versus an expectation of 11.2%. The company witnessed growth in almost all its businesses, especially the alloy wheel division. The company continues to outperform the industry with a growth of 59% against the industry volume growth of 37% on a YOY basis. The company also announced incremental order wins from electric vehicle OEMs, having annual peak revenues of around 470 crores. With these orders, the total peak annual value for orders received by the company from EV OEMs to date stands at 980 crores, with almost 52% orders for EV specific products. The stock is trading at a PE of 35.9 times FY24 EPS. Thank you.
Yeah, Tata Chemical announced the result, and results were above expectations. Benefited from the higher realization of soda ash. EBITDA margin saw improvement to 25% versus last quarter 19%. So substantially higher than the previous quarter and higher than expectation as well. Share is trading at around 14 times, so price wise looks reasonable. Global spirit results was continue to decline in this quarter as well, impacted by two things. One is higher raw material prices, that is broken rice, and also higher power cost, that is higher coal prices and rice husk prices. So that has impacted the performance, and margin came off to around 14% from last quarter of around 17 and a half. They used to do somewhere around 20% plus margins, but because of this recent decline, recent increase in broken rice prices, their performance has got impacted, and this is likely to continue for some more time as the rice prices are continue to remain high, and near-term outlook is negative. Then ABB came up with the numbers, and the numbers were quite good. And order booking is also very good. Order book came in at around 6,000 crores versus last quarter of 5,300 crores. And even the EBITDA margin also came higher than what expected. That is at 9.7% versus expectation of 8.4%. Share is trading costlier at around 62 times FY24 earning, but outlook continue to remain positive. Then Prince Pipe came up with the number, and the numbers were declining and even higher than Supreme Industry or the other competitors. Company has got higher impact of on the margin, it has came off to 7.3% versus expectation of 11% and last quarter 15%. Seems there is a substantial write-off of inventory in this quarter, mainly as the PVC prices has corrected substantially in this quarter. So that got impacting the Prince pipe. No doubt, long-term outlook continue to remain positive. Any substantial decline because of this in the prices of Prince pipe can be used as an opportunity to buy. Then few of the chemical company also came up with good number, like Fairchem Organic came up with the good numbers. The margin improved substantially to around 21% versus last quarter 10%. And revenue also increased by around 26% quarter on quarter and 60% year on year. So this can have a positive impact today. Then similarly, Fairchem Organic and Galaxy Surfactant both came up with very good numbers. Both are mainly specialty chemical, and both have reported good numbers. But the Fairchem is already at all-time high and already moved before the results. So then we may have a limited scope from here. And most of the infra company are reporting good numbers. Day before yesterday, we talk about IRB Infra. Now even GR Infra, NCC, and even PNC Infra has come up with numbers which were above expectations, mainly on account of higher executions which is happening in this quarter, and which is even leading to higher EBITDA as well. So all these company can see some positive trend in today's trade.
Yeah, thank you, sir. Good morning, everyone. In today's trade, gold and silver are likely to correct. Maybe test around gold can test around 50 to 300 to 250 levels. Upside, we can see a resistance at 50 to 600. So buying on dips is recommended. 250 to 300 levels will be good levels to enter long for a pullback up till 50 to 600. Silver similarly can be bought around 58 500 to 200 levels. This is a supportive zone. So at present prices are expected to correct till the support levels, and then again buying should be witnessed. So overall, again it can test 59 100 200 levels on higher end. NG has witnessed some positive buying. So 620 is a good level to enter long. One can maintain a stop loss of 615. Again, prices can test 630, 635 levels. However, it is a range bound, so 640 is also a good level to sell, maintaining a strict stop loss above 645. So prices are basically in a range from 630, 35 to on lower end 610. So trading in a range bound moment. Crude also we had seen yesterday a spectacular run, and after that the prices cooled off. So maybe for the day again, if silver crude test 72 30 levels, 30 50 levels, one can sell. Prices are expected to test 70 130 70 100 on lower side. However, it can be bought with a SL of 7030, as long as holding 7000 upside till 72 50 73 is expected. Copper also likely to correct till 657. 57 is a good level to again enter long. One can buy with a stop loss of 53. And prices, however, will be kept at 650, 665 to 66 levels. So on higher end, if 65, 66 comes, one can sell with a stop loss of 669. That's it from me. Ria can take over from here.
Good morning, everyone. So on the currency front, we are seeing some pull-off that is happening on the dollar index front. This is probably because the inflation numbers for the US is scheduled for today, and we are expecting some cool off happening from the uh, highs that the inflation has seen into the US economy. So probably it should come near 8.8%, 8.6%. So I think this is what we are seeing getting discounted into the dollar index. Similarly, the same effect is seen into the Indian rupee also. We have seen a spot opening on the appreciative side. In the future contract also, it has opened on a red note at around 79.70. 79.53 will be a very crucial level or a support for the Indian rupee in the intraday sessions. If it breaches that, it could again see the level of 79, 78, 88. For the resistance, 79.80 could be taken as a resistance. For the trend, I think it will be in a consolidated range in today's sessions. So 79.80, 79.53 is the range that we are seeing for the Indian rupee. For the other pairs, JP, we could see uh, for the other pairs, for the JPY INR also, I think you could see some correction that could happen into the JPY INR. Taking into consideration there is some relief that has come on from the dollar index. We are seeing USD JPY around 134, so it has pulled off from the highs of 135 and so on. So I think for the intraday sessions, a more of a consolidated momentum could be seen. That's all on the currency front. Thank you.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.